new investors to buy US debt, interest rates have to go up, not down. So I want to help explain exactly what's going on, because this might actually be part of a strategy not to crash the markets, but to corner China, the same way we cornered the British pound in the 1990s. And once you see it, it's going to explain everything that's happening today and how it's going to affect your 401ks, rising mortgage rates, all the way to the emergency Federal Reserve rate cut. So let me break this all down and explain exactly what's going on, and I'm going to show you what I'm personally doing with my money.
I want to point out that he said all the way to the emergency Federal Reserve rate cut. This is all on the table at this point with all of this going on.
So let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the 401k Hunger Games. I used to have a 401k, now it's a 0k. So this video is about to get insanely complicated really fast, but if you stick with me, I promise it'll make sense. And if you get through it all the way and you understand it, you're a nerd and I appreciate you. So here's what just happened. In early April 2025, something happened to the bond market that usually never happens, which was the sell-off of US Treasuries. By the way, whenever you hear me say treasuries or bonds, they're the same thing. I'm using them interchangeably. Now, the most important one of these treasuries is the 10-year Treasury bond and its interest rate. And the 10-year interest rate or yield went way up recently, which is completely the opposite of what we want to happen. And all signs point to China and Japan. Investors believe that right now, foreign countries, especially Japan and China, which are the two biggest holders of US debt, are dumping US Treasury holdings as a way to fight back against President Trump's tariffs. And this isn't just coming out of nowhere. China's been slowly pulling out for years. In fact, by the end of 2024, they were already down to about $760 billion in US debt, which is the lowest level since 2009. And all of this was started by just one move: tariffs. On April 9th, 2025, President Donald Trump hit China with 104% tariffs on all Chinese imports. China then responded immediately with a 50% retaliatory tariff on all US goods. That raised China's total tariff on American imports to 84%. And if you think that's crazy, President Trump came back again and raised the US tariff to 145%. And then China responded with their own 125%. All of this, by the way, happened in just 1 week. So it's no wonder the stock market just can't decide whether it wants to go up or down right now. But here's where it gets interesting. While President Trump raised the tariffs on China, he actually paused or lowered on a bunch of other countries. So now the pressure is on China. And what did China do? They didn't just raise the tariffs. They filed complaints with the WTO. They put restrictions on 18 American companies. They restricted exports of rare earth materials. And the biggest move, they started selling US Treasuries. That last one is the one that makes investors really scared. And that's because when China sells their treasuries, the bond prices fall, and that means our interest rates go up. But first, let me just explain why everyone is freaking out over the bond market and why it's so important. Now, the bond market is so important that it can control interest rates, it can control the central bank, the stock market, and even the president's actions. So let me just first explain how bonds control interest rates and the cost for us to borrow money. See, most people think that it's the central bank, the Federal Reserve, that sets our interest rates. But that's not completely true. The Fed controls short-term rates, like what's called the overnight lending rate between banks and the federal fund interest rate. But long-term rates, like the 10-year Treasury, are controlled by the market, by buyers and sellers. Now, if countries like China are selling bonds, the Fed can't stop that overnight. So what happens then to interest rates when bonds get sold off? Their rates adjust upward. And that's because bond prices and their interest rates move in opposite directions. If the price of a bond drops, the yield goes up. So here's an example. Let's say a bond pays you $50 a year. If that bond was worth $1,000, that's a 5% yield. But if it drops to $900 and you still get $50 a year, you're now earning 5.5%. And that's what we mean when we say yields are going up. That means bond prices are dropping, and they're dropping because someone is selling. But now, imagine hundreds of billions of dollars of bonds being sold at the same time by China and by other foreign governments that are watching this play out. That forces US yields even higher. So interest rates go up, and that's exactly what we're seeing right now. And this is a big deal because higher yields make it more expensive for the US to borrow money. And with over $30 trillion in national debt, that's not good. And if interest rates get too high too fast, it can break parts of the US economy and force it to deleverage. And bond markets can also force the president to do exactly what he just did, to back off the tariffs for 90 days so we don't break even more parts of the US economy. That's how China is fighting back. It's dumping US treasuries, which forces interest rates upward and breaks part of the US economy. That's why the Fed might have no choice but to drop rates. And this is where I want to share with you a new theory about what's really happening. It involves this guy, Scott Bessent. He's President Trump's Secretary of the Treasury. Now, in the early 1990s,
Pay attention to
Scott
this.
Bessent, along with George Soros, broke the Bank of England. And here's how they did it. Back then, the UK was part of what's called the ERM, the Exchange Rate Mechanism, which was a European agreement to keep currency values relatively stable against the Deutsche Mark.
There are going to be no devaluations, no leaving the ERM. We are absolutely committed to the ERM. That is our policy. It is at the center of our policy. We are going to maintain sterling's parity, and we will do whatever is necessary. And I hope there is no room for any doubt about that at all, that the government is determined to maintain our position.
The UK wanted to keep the pound within a specific price range, and to do that, they had to defend it by raising interest rates or using foreign reserves if needed. But there was a problem. The UK economy was weak, inflation was high, unemployment was going up, and most importantly, interest rates were already way too high for their economy to handle. So Scott Bessent and George Soros realized the UK couldn't keep it up. They believed the pound was overvalued, the UK couldn't defend itself forever, and eventually they'd be forced to make a choice. Either devalue the pound or leave the ERM. So here's what they did. They shorted the British pound. That means they borrowed pounds and sold them, betting that they could buy them back later for a lot cheaper. Some reports say they bought over $10 billion worth of shorts, but they coordinated this with other big institutions who saw the same opportunity. And when Bank of England tried to defend the pound by raising interest rates and buying pounds with their reserves, George Soros and Scott Bessent just kept selling into it. Eventually, the pressure was too much, and on September 16th, 1992, the UK withdrew from the ERM.
A unique day in London's financial markets ended with the Chancellor announcing that the pound was being suspended from the ERM, and that the second of two dramatic interest rate rises during the day was after all cancelled.
Today has been an extremely difficult and turbulent day.
The pound crashed, and that day became known as Black Wednesday. And George Soros made over $1 billion on this trade. And Scott Bessent was the key architect behind how it happened. So the question is, how does all of this relate to China and what's happening right now? And why this all relates is because Scott Bessent is recreating a situation where a country is forced to make one of two very hard decisions. China is forced to choose between weakening their currency or defending the yuan. Now, if China weakens the yuan, that would be good because it would make exports cheaper and help offset the impact of President Trump's tariffs. But it could also trigger a panic inside of China because that would create inflation, and investors might rush to move their money out of the country. It could make borrowing a lot more expensive, and it could even destabilize China's entire financial system. It's called a flight of capital, which is money leaving that country and being invested into other foreign assets like gold, Bitcoin, and things like that. That's a very hard decision to make. Or there's option number 2, which is what China's choosing to do instead right now. And that is to keep the yuan strong and to defend the value of their currency by selling their US dollar reserves to buy up the yuan. But to get to those dollars, they have to sell US Treasury bonds. And that's exactly what we're seeing right now. So from the outside, it looks like China is retaliating against the US, but they're also doing it to keep their own system from falling apart, because they have to. The real question is, how long can China sustain defending its currency before they run out of dollars to support themselves? And China's looking at the US and thinking the exact same thing. How long can the US allow their bond market to be so high and to have this high interest rate before their own economy unwinds, goes into a recession, and they have to refinance $9 trillion worth of debt in 2025 at this super high interest rate? That's why there's a capital flight in the US as well. Money leaving the US stock market because investors are saying, we're just going to wait and see how this all plays out. Which means we're full circle. We're right back to the bond market. That's why yields are spiking, mortgage rates are going up, and why everyone is panicking about the debt again. It's a race against time for both countries, and in that sense, it's not helping anyone. So if this is really Scott Bessent's strategy, he's trying to engineer a situation where China's under so much pressure, every move they make just creates more problems, with the goal that both countries come together to negotiate something more favorable for both of them. So the next big question is, what happens if China keeps selling US Treasuries? And a few things could happen, and none of them are really good. First, US interest rates could go up, making mortgages, credit cards, and of course car loans a lot more expensive. So the Federal Reserve might have to step in and start buying US Treasuries to stabilize the bond market. It's basically quantitative easing all over again, QE 2.0, and we've seen what happens when the Fed prints money. Any day now, we could see the Fed step in to do this. But the worst case scenario is a full-blown financial decoupling, where the US and China stop trusting each other's money completely. And that's how you get two separate economic systems, or two world reserve currencies. Now, we're not there yet, but every move we make from here on out matters a lot. And the good news is that no one knows exactly how this ends, not even the people that are in charge. We are just making it up at this point. But here's what I do know, and here's what I'm doing with my money and how I'm investing. Right now, I'm staying invested. And as crazy as this gets, I'll keep doing the only thing I know how to do, which is to dollar cost average into the stock market and keep buying VTI, Vanguard's ETF, which is what I have been doing. I'll keep dollar cost averaging into Bitcoin, and on weeks like the one we just had, I'll buy a little bit of extra, which is what I just did at a discount. Then I'm immediately moving my Bitcoin out of the exchanges and onto cold storage. And if you want a step-by-step guide on how to do that yourself, I have a 4-hour training guide that shows you how to do that. You can use coupon code Andre40 to get an additional 40% off. And I'll
So I think that's pretty good there to explain what I'm watching. And if you guys don't know what's going on in China with all of this, let me find my history here. And I want to find this video because there's some stuff going on in China that we're seeing come back now on the market side. But any thoughts on that video while I find this other video? Pipe in now. Go, BC, what you got?
Well, I mean, that's why the other day when I can't remember who said something about it just being a bunch of manipulation. It really is, because like they're playing a game of chicken with the global economy right now, trying to see who's going to back down first because their economy can't handle the repercussions. So it's we're going to jack your interest rates up and we're devaluing their dollar. And so to kind of bolster them, they're selling U.S. Treasuries to get U.S. dollars, but like at the same time, they're getting less and less. So it's a massive game of chicken, and that's where I've been waiting to see if they're gonna come to an agreement here within the next couple of months, because what the deadline of that refinancing of our debt is, like, I believe it's August, right?
It's what? What is it?
We have to refinance by August.
Yeah,
it goes in
it's broken up
September.
throughout the year. It's broken up throughout the year, but yeah, it's through September. Yes,
So
over
like,
$9
it's a
trillion.
game of, yeah, it's a game of chicken with the biggest global economies. So it's going to be interesting and painful for everyone to see how this all plays out, because China's doing what they have to keep their dollar even relevant without tanking their whole economy.
Yeah. So it's even worse than the game of chicken, though, because at the end of the day, I'm looking for this video that I watched. At the end of the day, this is fiscal war. This is policy war that we're pretty much in the middle of right now, and the markets are paying the price on it. So, man, where is that video that I watched? China's hurting. There's a video that I watched recently, and I'm trying to find it here, that actually had who keeps talking? Somebody in here?
That was me, probably.
Oh, okay. Sorry. No worries. There's a video that I watched here about this guy talking about his warehouse district, and they're all empty now. And I'm trying to find this video that I saw. I gotta find it. I watched it.
Dang, Piper, you watching a lot of videos.
Dude, I watch it. You guys don't understand how much I watch a day to stay up to date on everything.
See, and I just read news articles. Yeah.
I just can't find where this video is at. China.
Well, what did it say? Break it down.
There it is. Here it is. I got it.
我上个月不是接了一批铜的订单吗？
Last month, I took an order for a batch of copper parts. I've already bought all the materials. It cost tens of thousands, and everything has been cut, ground, washed, and engraved. It's not finished yet, but today the customer messaged me and said the delivery might be delayed. After customs clearance, the taxes have gone up too much. A TikToker who works as a bulk trade supplier shared in his video the huge pressure he's under after the sudden increase in US tariffs.
订单量5000多万美金，今年我们订单已经排到了26年的5月份。
Our orders are worth over 50 million US dollars. This year, we're already booked through May 2026. But with this 30% tariff hike, the impact on us is huge. If you're a small startup, it's not such a big deal because you don't ship enough to fill an entire container. But for us, it hits hard. Our profit margins in bulk trading are already razor thin. Now with a 34% tariff, it's like getting knocked to the ground.
He said the only thing he can do for now is wait. His backup plan is to ship through third-party warehouses in other countries. That's the only way forward. On April 7th, the owner of a clothing factory posted a video saying the entire foreign trade apparel industry in China is filled with anxiety.
现在做外贸单的
Everyone doing foreign trade now is nervous. A 50% tariff is just scary. Who's going to place orders under these conditions? Sure, some clothing businesses are still busy, but it's hard to make money anymore. US orders only make up part of our business, but there are so many clothing factories in China. If we all turn to Europe and there's no US orders, then think about it. Won't competition at home become even worse? Domestic sales are also weak this year. People just don't have money to spend, so how can this market possibly improve?
On April 2nd, US President Donald Trump announced a new round of global-based tariffs, raising rates on dozens of countries. At the time of the announcement, the actual tariff rate for China stood at 34%.
在现行适用关税税率基础上加征34%关税。
In response, the Chinese Communist Party announced on April 4th that it would impose a matching 34% tariff on all goods imported from the US. Trump then warned that he may raise tariffs on China by another 50%. The CCP responded by saying it's ready to fight to the end. While the Chinese government is showing a tough stance, many businesses in China are already feeling the pain. On April 7th, a TikToker filmed a clothing factory that had shut down and said the clothing industry is in serious trouble. All the machines in his factory are about to stop. He said this year is going to be incredibly tough. That same day, another TikToker posted a similar scene, workers moving goods around inside a clothing factory. He wrote that as soon as the US swung its tariff hammer, the impact finally hit the apparel industry. His factory originally had orders scheduled through the end of July, but now over 6,000 down jackets have been put on hold, and their ready-to-ship products are piling up in the warehouse. He said both offline and online sales are struggling this year. Even live stream selling isn't working anymore. With sluggish consumer demand and weak domestic sales, the foreign trade slowdown is pushing more exporters into the domestic market, creating even more excess production. He said this year's apparel industry is like a pressure cooker that could blow at any moment. This isn't just panic, it's worse than during the pandemic. Many clothing business owners may lose everything they've built over a lifetime.
People seeing anybody seeing potential war with China.
Another TikToker showed the current situation at his factory. Because of the tariff hike, orders have been delayed or canceled. Now his packaging and printing factory doesn't even have boxes to make. All he can do now is clean the factory. A TikToker shared a video saying that after the US increased tariffs, the impact on China's foreign trade is obvious. He mentioned that when he flies, there are hardly any Westerners on the plane, mostly people from Africa. Also, when entering the US, Chinese people face especially strict security checks.
I'm at Guangzhou Baiyun Airport right now, and the flight is about to take off. This tariff increase is really affecting China. If you look around, you can see there are almost no white faces here, mostly African brothers. This shows how tough the foreign trade situation is right now. When I went through customs, they saw my yellow skin and Chinese passport and gave me a hard time. They asked about every little detail, why I'm here, who I'm visiting, where I'm staying, how long I'll be, and what business I'm doing. Traveling abroad is already hard, and now people like me in foreign trade have to face Trump's 54% tariff hike and random checks.
On April 6, a female owner of a laser cutting factory.
Beautiful buildings were all leased out by middlemen. He said, look at these factories that were just built last year. Now I can't even find a single person. There are no cars or people on the road. Some of these factories are single-story and others have multiple floors. The landlords spent nearly $1 billion to build these. Just a few years ago, these beautiful buildings were all leased out by middlemen.
So, moral of the story is, they're getting hit way harder in their production sector than we are in the U.S. As of right now, because their entire GDP is reliant upon the real estate and their export business, right? So you can see they're getting absolutely crushed. And I know the US dollar has been falling, but take a look at the yuan also here, guys. Let's go to the yuan chart. I want the yuan. Just show me the yuan. Versus the US dollar is not going to matter. I need the yuan because the yuan has been dumping hard. There it is. This is starting April, and you can see how much it's just crashed back down to these levels that it hadn't seen since, early in 2025. But mind you, back here in late 2024, Japanese carry trade took effect there, just like it hit us. But now they're on a sharp decline too, and they've had every time we hit them with the tariff, the yuan keeps dumping even harder. So when you look at the US dollar versus the yuan, yeah, the US dollar's dropping, but at this point, Trump isn't caring about the US dollar by itself. He wants to know how it's looking compared to who's coming out stronger on top against one another, right? And so with the yuan dropping the way that it is and seeing their export and manufacturing dying on the vine the way it is, it's given a lot of strength to the U.S. So the interesting thing that I wanted to show on that first video, though, was where a lot of the money's going, because it's not going into the U.S. stock market. Obviously, we have retail buying in, but not any big institutional buy-ins, not any global buy-in. They're not grabbing that dip, right, like retail is. It's gold, and if you really look at how Bitcoin has held up against the TradFi market, Bitcoin's holding up pretty well. It's sitting above its 52 week. It's still, hanging around as 200 daily moving average. So at the end of the day, is this money rolling into Bitcoin, and what could this look like for Bitcoin going forward is really the big question of why I wanted to give the so what of what's going on there. And as I've said for months and months and months, it's all about that 10-year yield. So I'd love to take some questions, comments, conversation. OC guy, I see you in here. JR, Jesse, Alex O, Crypto, Trent, what's up? Melissa, Trade Intuition. Any feedback or questions or just comments on this that you guys have? It's pretty interesting that we're sitting here watching from the sidelines or heavily entrenched, depending on how exposed you are in the markets, to the war that's going on around us that no one's really talking about in full detail yet. So I'll open the floor and let you guys go with it.
Yeah, if you
So I
guys
have a
let me
question.
participate. Oh, go ahead, please.
Oh, sorry about that. Thanks, OC. So I have a question. Is there anywhere here on the Piper Academy to where it's like a PDF? Because like my memory is so horrible that I would need like to read it and to see it, like what means what. Because like to me, all of this is so incredibly confusing. Like my brain would literally need to
It's
read
not
it
just
multiple
you, bro.
times. Okay. To read it multiple times, but is there like a PDF to where it just kind of explains it, what to look for, what it means when we have interest rates going up, what it means when we have the now I have seen, your videos and you explain it, and I sometimes I'm making a point to like take down notes, but if there's like a PDF or something, man, like in my
So
opinion, that would be so incredible.
So the problem with that is that when I talk about something, I'm speaking of it from one slice perspective, right? Like one micro slice of the second and third order or the so what of that actual thing. But when you start to look like the 10-year treasury yield as a topic by itself, there's about 100 different facets of it that would, some of them on one spectrum would contradict what you're hearing from another perspective, right? So it would never be just a PDF. You would have an entire, there's people that get master's degrees in the world of economy that still can't wrap their brain around every single nuance of the 10-year treasury yield. You understand? But these are all recorded. I mean, I guess I could have, like get with Chat GPT and have her create, all the different narratives. But when you look at how the narratives would be touching other narratives and what that means, you would be talking. It wouldn't be a PDF at that point. It would be War and Peace. So
Yeah. Yeah, I just find it all confusing. Like I don't know. It's just level by level, and I just react. I'd like to be able to do what you do, where you can see it in the future, what might happen, versus me just reacting.
no, and I understand that. That's like it. Well, Andre Jick, like he does finance stuff all the time, and he even said in this video, "I'm just realizing this week how important the 10-year is, the 10-year treasury." Like this guy, this is what he does: is economy breakdowns and stuff like that on it for investors. And he just now realized that the 10-year might be the thing. While here at the academy, we've been talking about all eyes on the 10-year for at least 6 months. Um, but yeah, I think BC said he could put some stuff together, and I'm sure that we can, uh, field some questions, like, hey, how would this affect that, and put out some stuff like that. But it's really, um, Jesse Gellick, did you send Melissa a friend request just now? Oh, okay, cool. Yep. He did, Melissa. She's just checking. She don't want no scammers. But yeah, so I mean, we can put some stuff like that out, but you have to understand it's just it would just be the surface. Like it's not, a catch-all document that you would get. Trade intuition.
All right, awesome, man. Appreciate all y'all's help. You guys are like the best. Appreciate y'all.
I
We
got you
try, bro.
covered.
We try. I appreciate you, man. Go ahead,
And
OC.
absolutely, I got you covered. We created in one of the classes, we created a professor for oh my god, for Piper Academy. Sorry for that. And I share it here on notes. Let me see. It should be under members chart. Let me just find it, and I'll just copy and paste the link of that message. And the only thing that you need to do is to kind of like let it know once you plot in the initial message. You'll have to tweak it just ever so slightly. That is because I duplicated some text. But other than that, you just need to tell it that you want to keep an eye on certain things. So just let him explain to you, like, what is a 10-year bond, right? And it's already configured to give you an easy to digest, easy to follow explanation. So let me just look for that. And I'll send it here. Here it is. Sorry for that. So, did I lose audio or something?
Nope, you're there.
Oh, thanks.
Yeah, you're still good.
We're just quietly waiting. We're just quietly waiting for you, OC.
Sorry for that. All right.
As Mark Dutch says, sexy Mexi.
Thanks.
Like
By the way,
watching me cook.
by the way, it is important to you still need to let ChatGPT that we're gonna be playing a role game, so it knows that this is not for real, because as you may know, it is not allowed to give financial advice, right? But when he's in a role for a fictitious something, right, he's able to. So just remember that this model is highly pushed to tell you or to show you the narrative, all right? Just bear that thing in mind. So I would actually put a little bit more in here to do not stick to a certain narrative. I'm ready to understand the truth behind every explanation or something like that. Just add that thing. I did not put it into the public because, like, I don't want also to stir waters or anything like that. But just use this, and then you can ask, for example, what is the 10-year bond? How does that have to do with economy, right? So if you hear, for example, right here, something that pop your ears, like, for example, I don't know, what are we talking about? We're talking about what's happening with China. All right, so you just, hey, I know China is doing this and this and this and this and this and that. You just talk to him as if it was Piper or anyone else, right? This is this and this and that, right? I also heard this and this and that. I want for you to break me out what it has to do, or what should I be looking at. I have in my radar, I don't know, 10-year bonds, gold, silver. What's going to happen with the reserve of China? What's going to happen to the reserve of US, so on and so forth, and then you just specify 2025. So that will be it. In that way, once you already have asked all of your questions, like what does this mean? What does this mean? What does this mean? Now ask it to create a timeline of what should be, or a chart timeline on what you should be looking for, right? And basically, I'll give you a very easy chart to just look for and then react. Look for and then react. Look for and then react. It will be much easier this way. So you don't need to actually be keeping track on a PDF. You can build it your way with this prompt that I sent you.
Awesome, OC. Awesome. Yeah, we'll try to get some stuff together too. Thanks, armypiper, for the dope laptop. I got it hooked up to a fat old TV. Nice, awesome, dude. I'm glad, man. I'm glad. Nerd alert, BC Portcorp said. Dude, he is a nerd. So yeah, but you know, a lot of people have been speculating on like why Bitcoin has been holding up so well versus what we're seeing on the market sell-off. And I do think this could be a reason why. I just don't think it's a full-blown buy-in yet. I still think we're going to see lower lows because we haven't set higher highs, right? So but watching this from the perspective of there is a diplomatic financial war between China and the US right now, and that they're apparently seeming to have a lot more cracks in their armor already than what we are. I've even seen some TikToks talking about civil unrest starting to rise up in China. So it looks like right now Trump's game, Hunger Games, is doing pretty good for those that are, prepared, right? But and how China's being affected by it. But I do think that this is why we're seeing Bitcoin holding up, and that was the whole point that I wanted to make today. Because when I look at Bitcoin on the higher time frames, especially like the 52 getting that bounce. Shout out to LBC. Let's go and take a look at just like the NASDAQ and the SPX on here. You can see we're holding ours quite well. Well, if we go over to the SPX and Dow Jones, set way below it, way below it, way below it. Like they're dying in comparison. So Bitcoin, not quite gold standard, right? We just had a post today that came out from the Kabisi letter talking about that. But Bitcoin also it is holding up. It's just not to the level that gold is seeing a pump, and the big reason for that is exposure to Bitcoin, not quite as much as gold. So this came out an hour ago. Breaking global net gold purchases by central banks hit 24 tons in February. It's the most since November 2024, which happens right there towards the end of when we started seeing all the cracks. Is when you started hearing me scream even louder from the market tops. Mountaintops. This marks the 20th month of net buying over the last 21 months. So central banks are now on track for their 16th consecutive year of net purchases. Over the last 3 years, world central banks have acquired 3,176 tons of gold. Central banks are buying gold like we are in a crisis. So could we see a continuation of Bitcoin's absorption into this marketplace? It is very likely, but keep in mind when Bitcoin might be holding up there pretty well, but when we start looking at things like Ethereum, well below it, XRP holding up pretty decent there, looking pretty strong actually. Solana's underneath it. Ondo's underneath it. Like when you look at the markets of what's below it and what's holding it, I would be looking at the 52-week moving average if you're looking at altcoins. But if you're really just wanting to play the safe bet, Bitcoin is looking extremely solid as a competitor on the 52-week for making it through the wartime bonds. Bitcoin is wartime bonds 2.0 in my opinion. So, BC, you got any thoughts on that, or anyone else? Little Fish, I see you popping up there. What you got?
A real quick question while Little Fish is coming up. That very bright green line, yeah, that's your 52-week MA? Is that what that is?
That is a 52-week simple moving average.
All right, thank you.
Yep. BC, what you got, bro? Your thoughts on this?
I've just been watching a lot of other currency pairs as well, just to kind of see. It's like seeing how we're holding up against the yuan is fine, but like, how are we holding up against the Japanese? How are we holding up against the euro? And like all of these other currencies are doing extremely well, while our bond market and their bond market has been doing well, while ours is kind of getting crapped all over. It's kind of interesting to watch where the flight of money is also going to besides Bitcoin. Because it's
so
Germany's getting bought up.
There is the GBP, the British pound. There's the euro.
Mm-hmm.
Yeah. They're doing, but remember, economy wise, they're tiny compared to us. So,
Oh, yeah.
when you look, so when you look at those, they might be doing stronger than the Dixie is right now against the basket. It's absolutely getting wrecked, but we're still the biggest GDP. We're not at war with the rest of the world. So what they're doing, as soon as we start to shut things off and go back to status quo, we'll rally right back. This all is what I showed on that video to crush China. They want to just completely crush China out of the mix. So, and once that happens, we can start to wind things back and take control of the global economy again. So, it like Trump said, it's going to be painful. It is. It absolutely is.
Did you see how hard Alibaba got hit?
You broke up with a whole lot of movement there. Road sounds or something.
Yeah. Did you see how hard Alibaba got hit?
They got absolutely crushed.
And see, this is one of the biggest manufacturers of cheap Chinese goods you can buy online. And this is what they were talking about in that other video. It's it's getting to the point where it's not profitable to be manufacturing anything in China, which is kind of what Trump wants to do. Because it's okay, if I force it, if I make it where it's not profitable to manufacture anything in China, where do you manufacture these things? And that's what we're watching. Where's going to be the next place for global manufacturing?
Look at that. Look at that sell off on Alibaba, man. It's insane. Yeah.
It just got demolished.
Meanwhile, let's look at Amazon. Yeah, it's a sell-off, but it's not like Alibaba's. So there you go. Baba Yaz, what's up, man? How you doing? Little fish, you trying to come back up?
Hey, how's it going?
Good. How you doing?
Good. I got a question for you. Been looking at the content, and I'm wondering what's going to come first in your opinion, down to 74 or up to 80, 87, 88 for Bitcoin?
Flip a coin. Like the volatility, it could take one tweet. Like I can't give you that. We can have one tweet that says more tariffs or one tweet that says less tariffs, and it's just going to flip on us. So anyone who tells you that this is what is going to happen, that they're talking out their ass. I mean, if we just go off of what we're seeing on just metrics, I would say that's more likely that we're going to go up. Bitcoin's going to zero. I would say that it's more likely that we're going to bounce up before we head down if we don't get a sell-off, because we have a nice about $1 billion up here in that $90,000 range. So looking at the metrics of just the heat map where the market makers would move it, I would say up first. But at the end of the day, for long term, what do I think is going to happen? I think long term, we're going to see ourselves continue to make lower lows. I put this on. Did you watch this morning on the live stream where I showed the SPX? Yeah. Okay, yeah. Like relief rallies are a thing. We have these all the time. And I think that the relief rally has the potential right now to go up to the $90,000 range first. But that's all speculation. Like I said, one tweet. So.
Right. How about those liquidity, maps, heat maps? I see that a different. The one you showed was at the 3 month. There's other ones that are, at different time frames.
This is a 3 month.
What's the difference? What's the difference between the time frames?
The further back, the higher you go up, the further back you're looking in data.
Okay.
Like if I put this on like the weekly, you're not going to get all of this data back here. So bring this up on the weekly, let it load. There we go. You can see there's heat above us and heat below us. So, but this is the price coming up, where before I had it on the 3 month. Oh, get off there. Heat map. put this back on a 3-month, and we're now looking at much further back for that down and then the up. So give it a second to load and you'll see. So the further you go back, the more data you're taking in. Just a higher time frame. See, this was all that was being shown on the weekly. That's it. Now we've got all of this back here where you can see that. So
Okay.
yeah, right now there's more above. But if we go all the way out to the full year, if I can get it to load, you'll see, oddly enough, there's a multi-billion-dollar heat zone right down around $63,000 to $65,000, right there. 65. That's that range that I keep talking about. 63 to 67 is our first line of defense, and if that's where I start to move in even heavier, bro. Alex, though, you're spot on. I think when you hit that level down there, that is where you want to be engaged. And then good risk management. We break below that, then guess what? That line of defense did not hold, and we need to start looking at 51,000. Well, about 58,000 is the bottom side on that. But I'm
your mic's
watching about
going,
51.
Bubba, your mic's going.
Baba Yaz. Appreciate it, Baba. Yeah, so that's a great question, man. I appreciate you asking that. But yeah, like I said, one tweet right now, I think, yeah, we're probably going to go up and tap 90 and then reject down. Might be a really good short entry. Hint, hint. But yeah, I think one tweet could change any direction that we're going. So. Anyone else? Questions, comments, concerns?
Actually, I
Two
got
cents?
a question.
Yeah, what's up?
With regards to the tariffs, like, what do you think Trump's end game is for China, for example?
So this is being recorded right now. We actually watched an entire video about that at the beginning. I announced we're in war. We're at war right now. This is just as much war as if we loaded up all of our troops on ships and planes and sent them right to their shoreline. We are absolutely at war with China right now. Really good breakdown video that Andre Jick did. I'll drop the link in here in case OC doesn't get that loaded up in time, but you should go check out this link here. We've dropped this one. This is the actual impact on China that's happening right now. We watched this one, but the one that you need to watch before that is this one here. And it goes right back again to the 10-year treasury being the big factor right now. So found out something about we've already seen this before in the UK years ago, decades ago. And the mastermind behind it happens to be in office right now in the cabinet for Trump. So pretty interesting play there. So
Interesting. I'll check them out.
Yep. It's we're at war with China, man. Like through and through. Through and through. Anybody else have any other opinions after watching that video? Would you say that this is war with China here?
It's economic war.
Yep.
It's war with Canada.
It's just as much war. It's just as much war as any other type of conflict we could have. So yeah. So and it's really on who can survive the longest. It's what is that called? War of attrition. Who can survive this? Who can last the longest in this? And right now, I have to honestly say, it looks like we're winning. So
for now,
we'll see. We'll see what they got up their sleeve. But China's already in a point of deflation. Their economy was wrecked before they went into this. So.
So good.
It's going to be interesting to see how it plays out. What else? What else is going on? I have been training my dog a lot the last couple of weeks, so I appreciate OC for filling in for me. But here I come, dropping all of this doom and gloom on you guys. Did you miss me?
Always.
So
You
have
invited
any
me.
thoughts on?
Hold on, Alex. What's that?
No, go on. Whoever's asking the question.
Did you have any thoughts on the pause that he did for semiconductors on like the implications for our market and at least a short time, because they did say it'd just be a 2-month pause. So at least for now, is this going to help? Like, how much do you think that helps U.S. manufacturing?
Quite a bit, considering that Apple here, I'm gonna go to the daily, the 4-hour, I guess. This is from last Friday, and then we got a nice pump here this morning off of it on the Monday open. That was a move for Apple to the upside about 6%, and then people went, but it's all temporary, and it started coming right back down. So I think he's trying to inflate some energy and liquidity back into the U.S. companies and reverse the 10-year treasury yield. And if you look at the treasury yield today, we actually did get a reversal on that. Where is it at here? 10-year bonds. Yeah, bond dumped today a little bit, not a whole lot, 0.1%, but it is going back down in the right direction. So I think that's why you're seeing that stuff. He's trying to give a little bit of life to the company so that they can keep going stock wise, shareholder wise, and a little bit of pullback from the 10-year yield, which means people are buying this back up again. So, but I think at the end of the day,
It
people know
doesn't
that it's only 60
incentivize
days, and
too.
it's and I think that people are realizing this is only for 60 days. This can all still turn around real quick, and so it's selling right back off. I mean, this thing went up and then right back down. So
I think it'll
that's intent.
incentivize Apple to build in the U.S. too, right? It'll be like, well, you may want to start considering that as well, right?
You know what? We got to talk about that too, then, because let's see. There's Sony, right? Sony said something.
Because
Or
NVIDIA
Samsung?
announced that today, right? NVIDIA
Yeah,
announced
they
they're
did.
gonna have, right?
But do you
So-
notice? But do you notice the trend of all of those companies? I talked about this morning too.
It's like
4 to 5 years.
5-6 years down the road.
After Trump's not even in office, I think it's one of those things that they're doing to try to stimulate people to go, oh, the company's doing things right. But none of them are committed to immediate events. They're all after Trump's not even in office. So I think a lot of it's lip service, man. I really do. When one of those companies starts breaking ground with $1 billion or more invested, then I'll believe anything on those 4-year, 5-year promises.
The only company that's kind of in line with actually doing something is Intel. They took like $900 billion from the government and have already started some work in Texas to do some manufacturing there.
Was it Texas
Just
or
don't wanna pay the
Arizona? Which
labor
one's in
costs,
Arizona?
man.
Thought it was Arizona.
It was Texas. They've got one that they wanted to do in Texas. So they might be doing two. I don't know. I didn't hear about Arizona.
But don't you think he had to give? Don't you think he had to give Apple a break? Because in his last term, didn't they move a lot of their production to Vietnam or wherever the heck, India? I mean, they already kind of accommodated some of that. Like, he can't just slay Apple. I mean, you said, you can't move manufacturing
It
that
was
quickly.
NVIDIA, Arizona. NVIDIA plans to use Arizona. So again, that's a 4-year plan. So yeah, I think he did too. I mean, he did say he talked to Tim Cook. Trump did. And so this is probably a lot of like, look, you're going to kill us, man. We're a big U.S. manufacturer company, blah, 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 blah. If you can you give us throw a dog a bone here? You know what I mean? So it's going to be interesting to see who makes it out of this, because these big companies, they got CEOs that can go and get it on the phone with the White House, right? Where your smaller companies don't have any of that play. This is going to kill the middle class, in my opinion. Small businesses are doomed if this goes on much longer.
Well, like, honestly, I hate to say it though. It's like, how much how much of an American manufacturing company are you if some 145% tariffs on China destroys your manufacturing?
Well, when
That
you
doesn't sound too
consider
American.
no, not at all, not at all. But we chased everyone away back when we did NAFTA. NAFTA is what led to all of this. So that forced a lot of companies out of the country. Like, oh, we don't have to stay here. I can go get cheaper manufacturing in Mexico. I'm out. Like,
And have you guys seen, just to add to maybe that, have you guys seen what the Chinese manufacturers has been doing as retaliation for clothing and stuff?
Yeah.
So I don't know if you were saying something, maybe cut out. BC Portcorp. Oh, TikTok has been filling. Yeah, he cut out. TikTok has been filling up like out of this manufacturers, and for example, this most famous one. I don't know if you guys can recall the Hermes bags for women. The very expensive ones. That one bag costs you $14,000, right? $14,000 a bag or something like that. Well, then they went all out because they're moving production from there to Europe. And he revealed what kind of leather, where to buy the leather, what kind of thread, what kind of every freaking thing. And then he also said, well, then if you the finished product costs $2,000, and then you get a sell for $14,000, right? So I'll just sell it to you for that price. So come back to me, keep that guy, and I'll sell it to you. It's going to be exactly the same thing because I am the one producing it. So they're retaliating on big companies moving out of China, but going straight to the seller or to the buyer, from the US. So it doesn't actually matter how big of the tariffs are because the margin of production or margin of gains is just so insanely big that they are able to absorb it and even get a better profit out of the individual cells than from the big industries.
right, but it's not about the product or where it's made. It's literally about weakening China. So if these companies move to another country and they're now employing in that country, it's not it going into the Chinese economy like it was. And so it's still a sledgehammer on the head of China. And that's what he's hoping to do by keeping high tariffs on China, but then opening up for negotiations with Taiwan and Thailand and India and Mexico and like all of these other countries. That's not their economic enemy. Their economic enemy is China. So
yeah, absolutely agree. I just was kind of fitting in that little bit into it because I think that is I mean, this is not coming from the government. This is from the Chinese people, right? Trying to keep a public that they didn't have access to, and they're not going to have anything, right? So this is I don't think that this is going to be a big impact, but I think this is going to be a kind of like a with the technology that we have now. I think this is going to be very, let's just say, interesting to see how new strategies come up with, right? Like, for example, war between Ukraine and Russia. We'll see how drones changed the battlefield, right? Completely around. So I think the same thing's going to happen with this trade wars.
Yeah, the point of today, though, guys, now that we've honed in on all this and you guys have wrapped your brains around this stuff a little bit, do not expect volatility to end anytime soon. And as soon as it looks like the 10-year yield is being sold off again, or as soon as it looks like the stock market is dumping too quick, expect another tariff announcement, another tweet, another something. I don't think we're going to see volatility slow down anytime soon. So, which means bravo and yay for Alex O Crypto because he can trade that volatility all day.
Yeah, baby.
All right. I guess that about wraps it up. You guys got any questions? Yes, the Chinese business class is going to play as hard as the U.S. owners who can bear the pain longer. I think going into this, the strength of the Chinese economy, I told you guys a year ago, their biggest GDP factor is real estate, and their biggest real estate loan company filed bankruptcy. I mean, that should tell you how their economy was doing, and their dollar, their yuan, is way overinflated. So yeah, I think we came into this much healthier to start with. I think we will absolutely endure the pain longer and better than China. So.
I do have a question, Piper. It's just technical question. I'm recording it. Are you recording it, or you were saying that it's being recorded because I'm recording?
Yeah, it's being recorded because you're recording.
Perfect. All right. Yeah, just wanted to make sure that we're on the same page.
Okay. Yep. I saw Tyler down there. You guys don't know Tyler's the recording pro.
Yes,
that's why
right.
he never gets invited to the stage. He's not here to be part of the stage. He's here to do one job and one job only. Record, go.
Oh, I completely forgot about that. Yes, that is correct.
All right. Any questions from anybody before I head out of here? I hope this helped you guys and give you a little bit of perspective of the Whiskey Tango Foxtrot is going on here, right? The what the F of it is, we're at war with China. So, oh, is that food? Did you make me food? What are you cooking there, Alexo?
I got an Italian pasta going on here.
Some pasta?
A bolognese.
The bolognese, bello. Manja. Have a good evening. See you guys in the morning. Kick ass, take names, touch some grass, touch some ass. See you guys later.
Later, bro.
Later.
All right, I don't see any questions. I'm getting a lot of thank you guys, so I appreciate it. I hope that you guys understood that stuff, and go back and watch those videos. I dropped them in the link here. You can still access them. If you need to get another touch up on what they were saying, now people are starting to realize why I was so adamant about watch the 10-year yield, and if it gets close to 5, holy hell. Matter of fact, good Lord. It just went green again. The 10-year yield is actually coming back up right now. Which means it's being sold off again. So, like I said, volatility is far from over, guys. Hope you guys got something out of this. I'll catch you guys on Wednesday, and I'll see you tomorrow morning on the live stream. You guys take care.